is the voice of disruption.
Hi, I'm Ken Rutkowski, and you're watching Coin DMZ with William Quigley as we dive into what's going on in the crypto space, ICO space, and whatever that next generation of currency is. William here is the smart one. I'm the one that's just asking questions. Good to have you here.
Oh, that's not true.
Nothing fancy, flashy on today. What's the deal?
I didn't have my wardrobe consultant
this
morning, so I had to just put on regular stuff.
Okay, regular clothes are on. Hey, is crypto what Uber was to the car industry? Is crypto what it is to the bank industry, or are they symbiotic, being banks and crypto?
It's a big question. There are certainly similarities to that. If what you mean is Uber came into let's say the transportation or the taxi industry and said, hey, we're going to leapfrog with technology to get close to the customer, to get rid of a lot of the middlemen. To that extent, yeah, Bitcoin is like that. I always use, and cryptos in general, you know, there are these key words I always use when I describe blockchain-based businesses. And one of them is permissionlessness, right? We don't even think about this, but virtually everything you do in life, someone needs to give you permission to do it, right?
Fair enough.
Including opening up a bank account. Not only do you need the permission of the bank, you actually need the permission of the government. You know why? Because the bank won't give you a bank account unless they see a government-issued ID. So everything requires permission, with the exception of the blockchain. It's one of the more marvelous aspects of it. Anybody in the world can create a Bitcoin bank account instantly with no permission.
You have to have some type of, at least in the United States, verification who you are to
That's not true. Anybody can create a Bitcoin account. As long as you have access to an internet browser, you can go onto the blockchain and get an address. Anybody. What you're talking about is either going through a regulated or unregulated exchange, or some of the wallet companies, the people who you actually store your wallet, your coins with, they require identification, what we call KYC. Learn that term. KYC, know your customer. This is the shorthand of what banks do when they ask you for a bunch of ID. They're KYCing you. And
for upsells later on?
No, generally for regulatory reasons. They've got to know who you are, your social security number, because the various agencies within the federal government want to know who's putting money into the banking system and where did that money come from.
All right, so our show's goal is to get you to a point to where at least you know the basics, but also an acceleration process. So some of the questions I'm going to ask are very basic. We will go deep at times. Can we go deep real quick and then go back to basic again?
Yeah, in blockchain, when you say go deep, you've got to give warning signs because you can go really far down the rabbit hole.
Really deep. And this is, it may not sound like a deep question, but it is. Why do countries like Indonesia want to say ixnay to blockchain or to crypto, to Bitcoin? Why would a country want to say, no way, get out of here?
So there's many reasons, and as you know, Ken, Indonesia, several government officials in Indonesia have said, hey, we don't really like this cryptocurrency stuff, Bitcoin. Why is that? Well, first and foremost, anytime you have a government that's evaluating the banking system and has a ways to track every single transaction, which all major governments have the ability to do. They can look at any bank account, know who owns the money, where the money came from. They like that. So first and foremost, it's a lack of transparency. So governments get uncomfortable with that. Then in the case of Indonesia, to go more deeply, governments actually have a product. One of their products is their currency. And they actually make money giving out currency because literally they're creating it out of the blue and saying, here is the Indonesian, I don't know if it's a rupee. Rupee. Hey, it's an Indonesian rupiah. We just created it. It cost us very little because it was made out of cloth or whatever. And it's a $10 note. So that's pure profit. So do you think the government wants a competing currency coming in? Of course not. So that would be, I guess I'd call it a legitimate concern of theirs is, hey, we make money issuing currency, and if our people would prefer a different currency, then that's bad for us. Here we go back to the Uber example. The taxi industry was doing an okay job. You'd call them up, they'd come. Service not so good. If you had a bad experience, no way to record it or get that driver marked as a bad guy. Uber comes along, they come to you, press of a button, you can rank the drivers. It's a better system. Kind of banking systems, government issuance of currency versus the blockchain. The blockchain-based currencies are superior in many ways. The main way, of course, is that it is all digital and transferable, and it is immutable, meaning if I send it to you, I can't get it back. That's kind of nice. Almost every other way we pay people, a lot of people don't get this, but almost every other thing, from a credit card to PayPal to a bank wire, if the other person who sent that to you, after you do something for them, says, you know what, I want it back, most of the time they can get it back, and your only recourse is to sue them, which isn't really like practical. So what's beautiful about the cryptocurrencies that ride on the blockchain is they're immutable. I can send a Bitcoin back to you if you've sent it to me, but it's my decision, right? So you can't go and grab it back.
Let's go back to Indonesia. I want to talk about Safaricom, which is based out of Kenya, and they have done something called an M-Pesa, a mobile Pesa, which is their mobile currency. Now, Safaricom is a government-owned telco. So
now it is.
Right, so there is a connection between the telco, but a majority of people in Kenya pay with M-Pesa, with their mobile phone minutes. So the government does get something out of this.
Yeah, in that case they do. And you didn't have, in Kenya, you didn't have a lot of the existing systems that other more developed nations had. So when Safaricom, which at the time was a private company, came along and said, hey, you can transfer cell phone minutes to friends, and that became a form of currency because people were like, wow, I can see it, it's numeric, and frankly, they trusted the telephone system more than they trusted some of the banking and government systems, which was surprising, but in many countries, private companies have to earn your business, and the governments just say, do a business with me or else. So some people say, you know, Safaricom with its M-Pesa trading of cell phone minutes was a precursor to the blockchain.
I get it. But what was smart was the government did buy them, and now it's all encapsulated. So if you look at Modi in India, because India, of course, is going through a currency revolution. They're trying to change things around. How can the government be in blockchain and still be part of the currency at the same time?
Well, it can, for instance. So in the case of India, India has a lot of paper currency, and the Indian government has some very legitimate reasons for wanting to be able to better track the flow of currency, because the flow of currency also is the flow of commerce. And governments, if they're trying to figure out, do we invest in roads, do we invest in better regulations and overhauling those, better banking, the best way to look at it is, well, where are people buying things? Where is commerce being generated? If it's all paper money, it's hard to get that into a report, a digital record of it. So people like India are saying, well, you know, maybe we will use the blockchain for certain types of reporting. I haven't seen them move all the way to saying we're going to replace our currency, but there are a few governments who have said issuing paper money in the 21st century is going to become antiquated and inefficient. And there is a cost, of course, of paper money. Actually, when the bills get frayed and ripped, the banks send it back to the Federal Reserve and it goes out of circulation. They print more. There's counterfeiting. That's just another amazing thing about cryptocurrencies. Impossible to counterfeit, right? You know, when you get a cryptocurrency, it's 100% genuine.
It's legit,
There's nothing else like that in the world.
North Korea can't stay in business anymore because that's their biggest trade.
Well, think about this. Even a nugget of gold, could you and I, even if we carried around nuggets of gold, how would you and I assay whether that thing was legit? We can't, right?
So would let's call it a Indian rupee coin, it would be traded on the open market the way other cryptocurrencies would be?
Possibly. So if it would be based on, if the Indian government said, we're going to digitize our currency, so instead of it being paper, now you go on your phone and you see a coin there that you can transfer to a vendor. All right, no problem. If they built their own private blockchain and it was not compatible with Ethereum or Bitcoin or other blockchains, EOS or whatnot, you could keep it just on their chain, and the government would have more control to maybe make it difficult for exchanges to even exist. You know, that's that's a technical problem that's not too hard to do. You can make it difficult to have formalized exchanges trading your currency. So if they wanted to go that way, they could. But what you're getting at is this. In general, once you digitize this physical form from a paper note to a digital representation of it, and you have lots of people with access to the internet and to cell phones, once you do that, borders become sort of meaningless. Anyone with a browser can send an email to anyone in the world.
That's
that
right.
costs nothing. It's kind of the same thing with the cryptocurrency. So the challenge for the governments in the 21st century with things like cryptocurrency is, how do we think about it where the borders don't matter as much anymore? There's this phrase, currency controls, and places like Korea and China and India, they very tightly monitor when people have their currency within their country, how easy it is for them to send it out to other countries. Because if there's too much leaving, there's not enough to drive the economy locally. This is
It's a huge
a
challenge.
problem that isn't yet thought through.
But you would think big currencies, the euro, the yen, and the dollar, they need to get onto this as fast as possible.
I agree.
Because you can't be on the back train on this one.
We have to think of it as from a either or kind of thing, U.S. dollar versus Bitcoin. We should think of it as just better than thing.
Yeah.
A U.S. dollar that is now in a digital form, it's a token. You trade that and use it for buying and selling anything you want. You can get it instantly to somewhere else, whereas a bank wire, if you sent it to Brazil, it might cost you $50. Here it might cost you 50 cents. You can see the movement of money to people is extraordinarily better on a blockchain.
Absolutely. And this brings up those cottage industries, those wallets then that will be popping up that would store all these cryptocurrencies. We know that, and we talked about this in our last episode. If you look at Coinbase, Coinbase basically has 3 different cryptos it represents.
Yeah.
Bitcoin, Ethereum, and Litecoin.
Yeah.
Well, that'd be it's a limited wallet as of today.
It sure is.
So the wallets of the future would have to be much more robust with opportunities.
That's true. I think Coinbase has been very cautious in which coins it chooses to sell to its customers and allow for them to trade. And Coinbase is one of the earlier wallets. It's 2012 or 2013 when they started. And back then, there was Bitcoin, and then there was what we called the altcoins. So anything other than Bitcoin was an alternative coin. And a lot of those, you didn't know what was going to happen to them. And I suspect Coinbase was worried that if they traded that or allowed their customers to use that, there'd be a lot of customer complaints about, hey, no exchange allows me to use
slow
this.
to the game, it seems like.
I would say at this point, they need to understand that we're going to a point where you're not even going to have a company like Coinbase in the middle. You won't need to work with another human being. These wallets will be up in the internet cloud controlled by software, and those wallets will allow you to trade anything you want.
Yeah, I think you're right. William Quigley is joining us. I'm Ken Rutkowski. This is Coin DMZ. This is our 4th episode. Weekly, and we have some surprises coming up in the new year and how often we'll be doing the show, because it seems like it needs to be a lot more than once a week. William is a venture capitalist. Over the last maybe 15 years, you were a VC.
20 years.
20 years. And a venture capitalist, you have so much money. I think you were around $500 million.
Yep.
And you would invest it into a company. Generally, you would possibly get a 10-year payback, hopefully at a 3 to 10x return.
Yes.
And only about 10% of your investments would actually work out.
Yeah, that's roughly the math of a venture capital firm. You put in money in an early stage company, a company that recently formed that's got a big idea. You hope that with that money and more afterwards, as the company proves itself, it'll develop a great product. And then one day, either it goes public or another big company buys it, and that's when you get paid back. But often, you have your money locked up in that company for 10 years.
And you have LPs above you, people that put money into you that are investing
Yeah,
for
the
you.
limited partners who gave us the money to invest, they're waiting 10 years for their money.
Okay, so as I hear these startups saying, oh, no, I am not going to go to a VC. I'm going to do an ICO. I think they don't understand the premise of an ICO. In order to do an ICO, just tell me if I'm correct, you have to have a value for that token or that coin that you're going to be offering, correct?
I'm not sure that is correct.
Tell me.
In order to start a company, what do you need? You need ambition and an idea,
Yes.
right? And then enough ability to persuade some employees to work for you, right?
And a Starbucks locally. Or
And
Phil's.
yeah. So you can borrow their Wi-Fi. Remember, the blockchain is permissionless. So if you want to issue a new coin, and some of the audience might not know this, it's really like amazing. You can go create your own Bitcoin right now. It's an open source software, meaning it's not owned by a company. It's owned by everybody in the world. So you can take a copy of the Bitcoin blockchain and create your own chain. I can create a William blockchain and now issue people William coins. And now maybe people other than you,
I'd buy it.
You'd buy a bunch. But most people might be hesitant to buy it, right? So maybe it's never going to get a lot of
Just
traction.
for a second. Everyone in the audience, would you buy a William coin?
Yes.
Yeah. So
Awesome.
we're going good
All right,
here.
$50 per coin. So anybody can do this. Therefore, if you want to do a quote ICO, and that's where initial coin offering, that's where you say, I'm going to create this cool coin. It does some really neat stuff. And who would like me to have that? Think of Kickstarter, where you say, hey, I'm going to build this brand new, suitcase. It does all these great things, but I need some money for it. Pay me first. I'll pre-sell you these items. Once I've built it, I'll give it back to you, the item. And but I need the money first to go out and create it. It's the same thing with the token.
But what do I do with that token now?
Well, that would be part of the marketing of the token. You would say, hey, I need $1 million worth of Bitcoin. Send me this Bitcoin or send me this Ethereum. I'm then going to take that, pay a bunch of software developers and marketers, and we're going to build a cool token. And this token will be used by dog walkers. And any dog walker who is going to take this token, maybe he takes it because, I don't know, it's cheaper than taking things like PayPal or something else. Maybe you can build a community around it, whatever. There's actually something called Dogecoin, which is a Bitcoin basically that just has a picture of a dog, and that thing's worth like $300 million, believe it or not. So you could imagine industries saying, we're going to create our own token, and as a result of you using this token, you're going to get some added benefit. And as long as you convince enough people, that token will be traded back and forth as a currency. And keep in mind, there's well over 100 currencies in the world. Not every country uses its own currency, but most do. And you might say, well, you're a small country, we don't really like your currency. But for that small country and the people in it, they use that currency and they're happy. So that's how it works.
Initial coin offering, ICO.
That's one way to raise money to create a new token. There's also called a token generation event.
So let me ask real quick on the ICO, what government regulation, if any, or do you perceive to see some government regulation in the future when it comes to ICOs?
It's a very complex area, right? All the regulatory things you have to follow. But it really depends on the jurisdiction. A jurisdiction just means is where is the company that's issuing this token based? And then you would want to follow the laws of that country. And then there's international regulations, right? Things that we talk about like KYC. So you might need to know anyone who gives you a donation or buys your token, like a Kickstarter program, where you're then going to take their money and go and build something before you issue your new token. There are rules. It might be local banking rules. There might be tax rules. There might be securities regulation rules. So you can't or you should not just go and
just do it.
Do it.
You better know.
You better know.
Because I know like South Korea is saying, we're not going to let you do ICOs.
And yes, and China has said something similar.
So all of a sudden, if I have an office that's originating in Seoul or in Beijing and I want to do an ICO, do I have to now actually move my office to a country that allows it to happen?
Or move your office or set up a new
Location.
company in a place that's more suitable for issuing the coin, and have the people in that new company actually do the issuance of it. So that would be a way to do it.
What's the TGE that you mentioned, the token generated event?
What that means is there's two, generally speaking today, there's tokens, these like Bitcoin and Ethereum and Litecoin, that certain governments call a security. Mm-hmm. And then there's tokens that they say is more like just selling a piece of software. We call those utility tokens.
Which you have actually a WAX.
The WAX token is a utility token. Mm-hmm. and which means it's not a security. It's not like a stock. It does something functionally. There's a smart contract.
It's like going to an
associated with
arcade,
it.
buying tokens to be utilized within the arcade.
Yeah, it's a purpose-built token to do a particular thing. If it's a security, then there's many countries in the world have rules you have to follow before you market the security and sell it to people. And so depending on what you want to do, here's a classic example. If you want your token that you've just created, the William token, to pay a dividend, maybe we're going to be doing this dog walking business and we'll make money from dog walking fees, and people who own the token will get 50% of the fees. Well, if you're paying a dividend to the token holders, most governments would say that is a security. All right, and so now it has to abide by security rules. So dividends tend to be a thing that most tokens don't do. Part of that is because they don't necessarily operate a business, so there's not a profit stream. And part of it is intentional because they're like, well, I don't want to be a security. This whole area, by the way, is going to undergo massive re-looking at by governments.
And by the way, you're trying to help write this or work with the government to educate them. Do you feel the government is up to speed on what's going on, or are they pretty much behind the 8 ball?
I think some governments,
United States government specifically.
Yeah, I think some governments in the world are really thoughtful about it and say, well, this is going to happen. Everything paper is going to go digital. The U.S. government, of course, when you say the government, it's like it's not one entity. It's like saying Congress, right? There's constituents, but there's many agencies within the U.S. federal government that look at this and say these coins somehow fall under our jurisdiction, right? And so you're seeing that working out. It's an evolving process. It's a brand new technology. No one's ever seen it before. What they do know is lots of people and businesses like it and use it for legitimate purposes. And so the worries, you could say, of the regulators in various countries is making sure that their consumers don't get scammed.
Got it. Since we did bring up, or I brought up Uber earlier, would you ever see Uber having their own token?
Absolutely.
Yeah.
Yeah. And so often I look at a lot of what we call these token generation events or ICOs, and different people have different ways of evaluating them. One of the things I look at when I evaluate an ICO, which is or a token generation event, when somebody says, we need a new token. We have a lot. We have 1,000, right? There's like 1,000 tokens out there, from Bitcoin to Litecoin to Ethereum to Dash, now Wax, and so on. And some of them have some overlap. Some of them are very, very different, right? So you could take a Bitcoin. The principal difference between Bitcoin and most other tokens built on Ethereum is Bitcoin doesn't have a smart contract element to it. So with Bitcoin, you or I send it and we just tell it like an email, go to that address and it goes. With Ethereum, you can literally program it like a piece of software and tell it what to do. Usually do this if something happens. So that kind of programmability in money is amazing.
William Quigley is joining us now. William, I know your mother is an Uber entrepreneur.
Do you mean Uber as in a driver?
No, she's a massive entrepreneur.
She
First,
is.
how many kids? How many siblings do you have?
12.
12 siblings.
Yes.
And your mother, like I said, really likes the idea of all you working.
She does. Yeah. Very strong work ethic.
And the reason why I'm bringing this up, is she into crypto yet?
Just recently.
And that's where I want to go now.
Right. And you know why?
Because of you?
Because her son issued a coin. And she said, well, I have to own a crypto
wax,
coin.
yeah.
Yeah, a wax token.
Because I think everybody's mother and father
That's the market.
Are going after this whole idea. What's crypto? What's going on? And we have now seen this explosion of cheap cryptos exploding. Ripple.
Yeah.
Ripple probably by the time people are watching will be over $1 at the rate it's going right now.
It's amazing. What was it like a month ago? Do you recall?
Yeah, it's probably about 17, 20 cents.
Okay.
Bam. Ethereum, which was affordable when you and I started talking about it, was 80 cents, and we bought a ton of it. Right now, it's over almost $700.
Yeah, around $700.
Which you expected. You even said, hey, Ethereum is a better bet because it's easier to double something at that level than it is Bitcoin.
Yes.
So we're seeing the lower or less expensive cryptos gaining massive momentum.
Yeah.
Litecoin now is what, $400.
And that the simple logic there is what we call the law of large numbers, which is if something like Bitcoin has a $200 billion market capitalization, for it to double, it needs to create $200 billion worth of additional value.
Right.
Whereas if you have a token trading at $1 million value, it's easy to double because creating $1 million of value is easier than creating $200 billion of value. And as things get more and more valuable, it's harder for them to double, and that all makes sense, right? Starbucks at one point had one location, now they probably have 25,000.
Everywhere, right.
To double again means there'll be a Starbucks probably in the studio.
I'm hoping, but you're looking at, because you and I, of course, before we do the show, we always talk about different topics. And one thing you said was the rise of Ethereum.
Yeah.
You expected this.
Of course.
You've been talking about it. In, I think, show 2, I said, why is Ethereum stagnating? You go, really stagnating? Maybe for the last 3 months it's been stagnating. Man, it just got rocket fuel. It just exploded.
Because you can't expect, nothing in life is just a gradual daily increase over time. This rarely happens. What you see is this kind of erratic up and down, hopefully always up, but erratic up and down because that's how it is. A group of people hear about something, they all rush in, they buy it, and then there's not much buying for a while, then more buying. And so you see this kind of up and down, and that's what we've seen with Ethereum. When people were complaining that Ethereum hasn't done anything, for a few months, it was sort of flat at $300.
Buy it.
But it had gone from $6 in December 2016 to $400 by May, and then it took a pause. It went down to about $300. That was still a very good run-up.
Absolutely. It really is. So you right now are sitting at that point to where you're looking at all these cryptos. You're getting excited.
Yes.
How diverse have you become by diversifying your portfolio, or are you pretty much tactical? Do you say it's Bitcoin? Do you say it's Ethereum?
I would say what my partners and I do when we're considering how to manage our portfolio of cryptos, we typically have what we call the core holdings.
Okay.
And those have gone from Bitcoin and Ethereum to now Litecoin and Dash and Ripple. Right, as we start to see.
You were so skeptical of Ripple. You were initially.
Yes,
and you
I
still
was.
are probably.
Well, there's some things I really like about Ripple, so I've decided to get some exposure to it. And then what we do is, by the way, those will take up they represent the majority of the value of all cryptocurrencies. And then what we do is we look at the emerging tokens that we think have good teams behind them and have great use cases. And that's, by the way, where all the work is. Because it's easy to say, well, Ethereum has 30,000 developers around the world who are building applications on top of it. It's the first kind of mass market safe contract built on a smart contract, built on a blockchain. It's got a lot of value, right? It's harder to take a look at things that are not yet caught on. Maybe they're only traded on a few exchanges, but you see a lot of potential. Those have more risk, but obviously more upside.
Which one do you like?
Well, there's plenty out there.
What
I think
do you
at
like?
some
What
point.
did you buy in the last 2 days that you didn't expect over the last 3 days?
Well, I mentioned one which has already gone up quite a bit, but I do like Dash, and I like Dash,
Dash
for
is
one particular reason:
What?
the time it takes for a transaction to settle and the fees. I
reason
keep
why I
bringing
like
this
Dash,
up,
and I think I told you, is because they actually advertise it. I
Yes.
hear it on NPR.
and it's worthwhile depending on what the audience is looking for in these sessions we have. It's worthwhile at some point for us to discuss the governance, which sounds kind of boring, but the governance of the various cryptocurrencies and why the Bitcoin governance model, which means the people who make the decision about what happens to Bitcoin, that governance system is not that great.
Not yet, but it's going to.
It may never be able to. And so what you see with coins like Dash and others is they've improved upon the government's
Meaning
model.
that they're actually contributing something to the core of that Dash, let's say the committee, whatever, where they could reinvest into the buildup of it.
Yeah, put it differently is Bitcoin is very rigid in the rules that it can change. And who gets to change those rules those people have a strong disincentive to change them. Whereas the next generation coins, when we saw the flaws in that model, we created, if you will, a constitution that's more flexible and adaptable to the needs of the users.
Which you like. Last thing, real quick, I want you to open your phone up. Get your phone out. It's over
Sure.
here. Here's your phone. Remember how I started around Uber? I want you to open up your Uber app. William Quigley and I are hanging out real quick.
All right.
Tell me when you got it open.
It's loading.
It's loading, and we're all asking this question. If you go hit this right here, we are going to. Here,
I can hit that.
You hit that, and you hit mine. Hit mine.
All right. I'm clicking on like
and what we're going to do
settings.
is we're going to see what our Uber rating is. Your Uber rating is a 4.71. What's mine?
Yours is a 1.
No, it ain't a 1. What do I got?
You beat me slightly, a 4.78.
Oh, I'm not at a 4.8.
But you have been giving people big Bitcoin deposits
I
in order to
haven't.
bump
You
up
have.
your
That's it.
rating.
All right, hey, follow us on what's going on, CoinDMZ.com.
I didn't know you could do that.
You could do that. That's your rating, dude. Not that good. And every week we're here. We'll be expanding the show in a lot more ways. William Quigley, if you want to find him, go to waxtoken.com. Right?
Yeah.
That's
Yes.
where you can get some wax
Yes.
tokens. They're available on the 29th.
Well, we have completed the token generation event, and
Can you get them?
we will be distributing the tokens out to the people who bought them in the next 30 days.
That's it. So go over there, of course, CoinDMZ. Thanks a lot for hanging out with us, and thanks for the great
Thanks for
team
your
that
time.
puts the show together every week. We'll be back next week.
Thanks.
Great.
Good.
was good.
Yeah, that was good.